We have a special show for you today. We have 5 methods that we use to find our next multifamily property. If you're someone who's just starting off, whatever it may be, this is what you're gonna do to stand out. Nobody else is doing it. Be careful what you ask for because you just might get it. Now you have to evaluate that piece of property that just came across your desk. This is where it gets fun. Good afternoon, happy Thursday. Welcome to another edition of Market Hunter Thursday. We're gonna kind of put it all together for you guys. Hey, it is all right if you don't have a group like us. If you're someone who's just starting off, perhaps you and your partner, your spouse, a buddy of yours, whatever it may be, you may not have that leverage really to go ahead and get in front of a broker to send you some opportunities. This is what you're gonna do to stand out. You're gonna put a 1-page summary together and why nobody else is doing it. You are trying to stand out, and he's gonna know, she's gonna know that you are someone that they can work with, that has the ability to close because they've taken you seriously based off this summary that you put together. All right, number 1 is going to be a bio about yourself, a quick bio, specifically your real estate bio. What have you done up to this point? Even if it's just a flip of a single family home, heck, I don't care if it's the purchase of your own primary residence. You could be house hacking or something like that. You might have been involved in a syndicated offering, right? Just explain to them your real estate background, and specifically, if you don't have much of one, obviously to go ahead and partner up with someone that does have real estate background. You're also going to discuss their real estate background right after you discuss yours. All right, so that's number 1, real estate bio, extremely important. All right, number 2, what you're going to discuss about is location. The location that you want this specific property, right? It doesn't need to be specifically one city. It could be several cities. You don't want to do too much, right? Because these brokers, they're pretty much geographically based. And so they focus on particular markets, right? So you'll have a broker not only focusing, you might have a broker focusing, for example, on the entire state of North Carolina. You might have a broker focusing just on Northern Carolina, Northern North Carolina, and then Southern North Carolina, so on and so forth, right? So you want to make sure that you probably give them a couple of cities that you're interested in investing. And then you're going to talk about some of the metrics that really make that city attractive to you. And I want you to stay tuned because we're going to get into those metrics later on. All right, the third thing that you're going to put on this 1-page summary is going to talk about the asset class that you are interested in investing in. Obviously, if you're a value-add investor, like we here at the DeRosa Group, you're going to be interested in C, C-, C+ type properties that you're going to renovate and turn around and improve, lower the expenses, improve the property, raise rents, make it better for your tenants, and obviously for you and your investors as well. If you're a value-add investor. But if you're a growth investor, you're going to probably be interested in those B+ type properties, right? That's really going to benefit just from those show off of the appreciation, more so than the rent growth. And those are properties that you're going to find a little bit more in the Northeast. Remember, we had interviewed a guest speaker from Boston, Massachusetts, how expensive things have gotten up there, for example, versus, cities down south, right? A little bit more value add centric. Number 4, you're going to talk about the number of units that you're looking for in a particular multifamily, right? You don't need to pinpoint the specific number. You can give a range, 10 to 20 units, 30 to 40 units, whatever it may be, because it's never going to be a multifamily just with those exact number of units, right? We're looking at properties with 273 units. Other properties are 369 units, right? So give them the range of the number of units that you would be interested in, right? That's number 4, number of units. Number 5, and probably the most important, number 5 is going to be financing, right? They want to know that you have the ability to close if they bring a piece of property across your desk. You can discuss about your own capital situation. You could talk about how you are JVing with someone, that you're partnering up with someone, and they have the capital that's going to back you up. They want to know that you have the ability to close and potentially the speed to close, because if you don't, it doesn't look good for them. So those are the 5 items that you're going to put on this one-page summary to make yourself more attractive to brokers. Now that you've sent that to the brokers, look at this guy. You know what? He's got his stuff together. He really listed exactly who he is, what he wants, how he plans on financing, where he's looking. Now they send you a property. What are you going to do? Be careful what you ask for, because you just might get it. Now you have to evaluate that piece of property that just came across your desk. This is where it gets fun. I'm going to talk to you about the 5 sources that we here at the DeRosa Group use when we go and talk about evaluating a deal. Number 1 metric that we use, and the source that we use for that particular metric, population. The source that we use to figure out population and population growth in a particular city that we are interested is worldpopulationreview.com. Just go to the search bar, type in the name of the city that you're interested in, and it's going to give you a great amount of information. Even if it's a bigger city, it's going to give you some history of the city. But if you scroll down to the middle of the page, you're going to see a graph chart, and on that graph, it's going to be the population. And it's going to be maybe a 10, 20-year graph of the population growth or decline in that particular city. What are we specifically looking for? We're looking for consistency. We want consistent minimum 1 to 1.5% population growth each year for the past 5 years. And worldpopulationreview.com, they get their data directly from the Census Bureau. All right, so that's why you know that information is accurate. That's where we go. That's number 1. The second metric that we use when we are assessing a deal, obviously, is job growth. We go to a website called bestplaces.net. Give you a little sneak tip on something, guys. Each one of these websites that I'm giving you, absolutely free. No subscription, no hanky-panky or sign up here. All of this stuff is free directly at your fingertips. Bestplaces.net. It's going to give you great information about the current job growth and future job growth in that particular city. This is why I love this website. It's going to give you some other information about the economy and real estate, crime, and so on and so forth, but we specifically go to bestplaces.net for job growth, both current and future. Third metric we're going to assess when we get that property sent to us by that broker, because they loved what we wrote in that one-page summary, is median income. Neighborhoodscout.com. They got some tabs up there. One of them is a demographics tab, one of them is crime, one of them is real estate, and so on and so forth. If you go to the real estate tab, you'll scroll down to the middle of the page, and you'll see median income, and you'll also see the 4th metric that we assess is median rent. We go to neighborhoodscout.com for median rent and median income. We want to make sure that the median income more than covers 3 times the monthly rent on an annualized basis. So for example, if rent is $1,000 per month, multiply it by 3, $3,000 per month, $36,000 per year. Therefore, we want the median income to be over $36,000 a year in that particular city. And we want it to be more than $36,000, not just $37,000, $38,000. We want median income to be closer to $45,000, $50,000 a year if the median rent is $1,000 a month in that particular city. The last metric that we look, and it's so important, folks, it's crime stats. Where do we go for crime stats? We go to neighborhoodscout.com as well. There's a tab specifically on that website called crime. What I love about it is that there's a heat map right there. If you scroll down to the middle of the page, it'll tell you some of the safest neighborhoods in that particular city and the neighborhoods that have the worst crime also in that particular city. So you can enhance that map. You can see the streets, you can see the route numbers, and so on and so forth. We had an investor send us a deal last week in a town in Texas, and hey, I think I found something real interesting. First thing I did, I was like, But as soon as he told me some of the metrics, so let me take a look at the crime in this specific small city in Texas. And sure enough, one of the highest crime rates in the entire state of Texas. I was like, thanks, pass. Guess what? I'll give you a little pro tip here. Call up the local police department in that specific neighborhood. Tell them you're thinking about moving into this particular neighborhood, perhaps into the specific apartment complex, and ask them if they can just nicely send you over the latest crime report for that neighborhood, right? They have to maintain crime stats on a monthly basis. You can ask for the past 2 months, you You can ask for the past 12 months. Folks, we do this for every single one of our properties. That is it in a nutshell. For summary, top level, put together that one pager. You want that broker to take you seriously. Answer your phone, answer your emails. Please leave your suggestions, comments, opinions at the bottom of the page. If you like it, please smash that subscribe button. Have a great week of investing and enjoy the weekend. All right, everyone, be well.